One of the differences for a business that's registered as a charity compared to a business that's registered as a private company is the source of income for that charity, i.e. where the money comes from. A charity generates income from a variety of sources, from trading, from grants, from sponsorships, but also it generates income via donations. In this week's I Hate Numbers video, I'm going to be looking at donations that are made by corporate bodies, by companies to charities. I'm going to focus on what I call individual giving, and that's where individual donors will contribute or donate to a charity. We're going to talk about something called the gift aid scheme. I'm going to outline how it works for a charity recipient and how it works for the donor. I'm also going to be talking about the benefit in tax terms for an individual who gives a donation to a charity in the UK. We're also going to touch upon some of the compliance issues and the things that we need to be aware of. In terms of the gift aid scheme, the gift aid scheme is a very powerful device, and based on 22-23 tax figures, approximately 1.9 billion, that's about 9 zeros by the way folks, following that, was generated for charities via the gift aid scheme. Now what is the gift aid scheme exactly? Well, let me give you an example to illustrate this. So I, as an individual donor in the UK, donate £100 to a charity. Now that charity is able to take my £100 donation, thank you very much, but also it can claim an extra 25% on top of my donation via HMRC. So that means that £100 donation to a charity is actually worth £125. Much needed cash goes to the coffers and helps it deliver the benefits that it needs to for its community, for the group that it serves. Now within that is an important consideration here, and that is that me as an individual, I mustn't receive anything by way of value from that gift. A gift is, as it implies, there's no expectations and nothing's actually received in exchange. There is something called donor benefit rules, by the way, folks, but I don't want to go off track. I'll talk more about that later on, but as a general approach, the donor must not receive anything by way of value from the charity. Otherwise, it ceases to be a gift and the gift aid scheme is no longer valid. Now, if a company was in the same situation, so I Hate Numbers Limited made a £100 donation to a charity, which is perfectly fine, the charity would not be able to claim any supplement, any tax relief on top of that. It would get £100, that's very nice, but it would not be able to claim anything on top. The second consideration is just some general guidance and some things we need to be aware of. The most critical thing is, me as the donor, it's critical that I must have paid equivalent of that tax in the year that I'm making that gift. So for example, I make a £100 gift to a charity, a £100 donation. The charity claims £25 back, thank you very much. But I must have paid at least £25 by way of either income tax or capital gains tax in the year that the donation is made. Now that tax could have been paid tax through PAYE, it could have been made tax on my dividends, tax on my self-employed profits, or tax on any investments or shares or investment properties that I'm disposing of. The key thing is you've got to have paid the equivalent of that amount of tax. Now, where the sting in the tail is many individuals who make donations, they don't have what I call taxable income, and technically speaking, HMRC can assess the individual and ask for that tax from them. So be very careful, folks, by the way, that if you do make a donation, make sure you've at least paid the equivalent amount of tax. If not, HMRC will seek to recover that tax from the individual donor. What other things should we be wary of and we should be careful of? Now, declarations are really important, and it's quite often, if you remember making those donations to a charity, the charity will normally ask you to verify, confirm that you are a relevant taxpayer. Now, we can have that declaration, by the way, made verbally. If that declaration is made verbally, it's really critical and vital that a charity follows up a confirmation that they have received the gift and that you are indeed a taxpayer. Keep that on file. HMRC do reserve the right, by the way, and they have done, to audit and verify any gift aid claims. So make sure there's a declaration in force. I referred to at the beginning of the video about benefits. Now, in my experience, people who donate to a charity fundamentally are driven by the need and the desire and wish to support the charity. Saving tax isn't the primary driver. Having said that, it can still be something that we should consider as individuals, because you may not have actually made those claims for gift aid relief on your own personal tax return or via online mechanisms. And if you haven't, the good news is you can go back 4 years. Now here's how it works. In the United Kingdom, there are 3 classifications of taxpayer. There's something called a basic rate taxpayer, which for the 23-24 year is where your total income is up to and including £50,270 if you want to be precise. Let's go on a nice working 50k approximation. Now, if your total income is up to that level, you are what's called a basic rate taxpayer. You make a donation, there's no additional reduction on your income tax liability for that particular year in question. Now, if you happen to be a higher rate taxpayer, and a higher rate taxpayer, certainly for 23-24, is anything from over 50 up to 150,000, then you're paying tax in that additional band at 40%. Now, if I made that donation of £125 to the charity, I'd be able to claim back 20% of that donation by way of a tax reduction or a tax refund if it's all been finally settled. So that means my £100 donation is effectively me being able to reduce my tax bill or get that money back to £25. Not bad at all. Now, if you happen to be in that additional bracket, by the way, over 150, you're called an additional rate payer. And as a NB, folks, or a side, that drops to 125k from 24-25 onwards. Check out last week's video, by the way, where I talked about something called fiscal drag. But let's get back on track to what we were talking about. If you happen to be an additional rate taxpayer, then you can get back £31.25 for every £100 you donate. As I said, if you haven't actually made that claim, then it's worthwhile reassessing your tax returns. Many taxpayers don't consciously record the gift they made. Check through your bank statement, see what you've made, and remember, you can go back 4 years to make a retrospective claim. And certainly when numbers and money is tight and challenging, then it's always going to be a good boost. And anyway, you should always be conscious about the tax that you're paying, manage your affairs so you pay what you're legally responsible to pay. Don't pay any more, don't pay any less. So folks, let's summarise the main headlines we've got. Gift aid, very powerful. As I said, 1.9 billion, that's 9 zeros after it, worth of gift aid relief given up to 22-23. And by the way, folks, higher rate taxpayers claim back about £740 million by way of reductions of tax rebates through the gift aid scheme. Number 2, it's got to be a donation to, generally speaking, nothing received back. So things like having subscriptions to a membership scheme where you get something in return for that membership is not gift aidable. Fundraising events in general, there are ways to actually structure schemes to get gift aid, but in general terms, effectively when you've got admission to a dinner, you get something in return, that ticket price is not gift aidable. Number 3, corporate giving. Giving money via your company is fine, but there's no gift aid relief on top of it. The charity gets a £100 donation, that's all, nothing else to top it up. Charities, as long as they're registered with HMRC, go through the requisite steps, can claim 25% on top of the donation from an individual taxpayer. And lastly, make sure you've paid at least the equivalent amount of tax through income tax or capital gains tax. Otherwise, HMRC will seek to claw it back from you as the individual donor. Folks, I hope that made some sense. I'd love it if you could share it with those who you feel would benefit. If you are a charity, make sure your systems are in place. There'll be more on gift aid and charitable giving in future episodes. If you're a donor, then it's a good thing to give to charity to support them. They are fundamentally businesses with a not-for-profit objective. And until next week, folks, happy charitable giving.